Good morning, guys. I have done two videos last week about the market, and the market continues to go down. Okay, so in this video I'll try just to give you some insights about the market. When all the market is going down, so you shouldn't go long. Okay, what does it mean? It means almost all the stocks go down. Almost, but not all. Okay, you can still find some stocks that are going up. Okay, but the problem here is just you be careful. The stop loss is always there when you buy, because a lot of people, when they hold the stock for long and they see a big sell-off of the market, they will sell because they can't stay more when they see that all the people are selling, and it's a dangerous thing. A lot of people they ask me, okay, why this sell-off? For you and for me and for anyone else, if you want to understand the market, don't look for reasons. Okay, don't look for reasons why the people sell off their shares. Who cares why? I see the price is going down, I'm losing money, so why should I ask someone else why you sell your shares? Okay, it's not my problem, and it's not my business. Okay, it is his business. Okay, so one of the guys asked me, how do you know that people are selling? Duh, you see the price. The price is going down. Almost all the stocks are going down. So how you tell me, how do I know? I know because I see the price, and anyone can see the price. It's so simple. Trading, if you can try to think about it, it is so simple. But people, because of the guys online, because of the books, because of analysts, because of a lot of stuff, a lot of people who talk, they make it so hard to people to understand it, and they like that. They like that you don't understand. Why? Because they want you to listen to them. Okay? That's why analysts, you find famous analysts, they get millions of dollars each year. How do they get millions of dollars and they don't trade, they don't invest? They don't invest and trade because they know it's risky. Okay? They have to risk their money in the market. That's why a lot of people that you see, a lot of big names, they don't trade, they don't invest. What they do? They go to interest rate vehicles, either bonds or money market or CDs or saving accounts with 1% to 2% interest rate, because they are scared of the market. They will never risk anything in their life. That's why they just get their money by saying something to the people. Now for you, if you follow them, you will lose your shirt. For example, some stocks, they go down, they lose like 5%, 10%. The stock loses a lot of its price. For example, the stock was 50 and now it's 40, and you go to analysts and they say, oh, it is a hold. Oh, okay, hold. Do you know why they ask you to hold? They ask you to hold because the other guys, the big guys, are selling, and they want you not to sell right now because they are selling. It's in their advantage to sell now, and you hold, because if you sell again, if you sell, I sell, the price will go so quick down. Okay, so when they go so quick down, they lose some of their profits. Do you see this? This happens with metals also. But the people who hoard coins, silver and gold, they hoard it, they buy it. Wherever you go in the TV, wherever you go in the channels, what they ask you to do? Buy silver and gold, because in the future it's a metal, it's a precious metal, it will go up, it has a value. What is this value? Okay, gold was 1884 in 2011, now it is 1300. It lost about 25% or 30%. Silver was $48 in 2011, now it is 21. See, it lost 65 of its value. So you are losing money, and the people, they ask you, buy more, buy more. Okay, maybe it goes to 10 years, 20 years, 30 years, it's going down. So in your life, maybe you will never see when the metals and precious metal will go up again. Okay, this is just an analogy between coins, silver and gold, and between the stocks. They are the same. Anything. This is my theory, and I'm trying to make a theory. Maybe I put it in a book and I sell it later. Okay, this is the theory. The price is king. If you see the market is going down, or the market, don't be naive to think that this is a small correction or something. Okay, small correction doesn't take that long. Okay, and some stocks, if they go one day, 2 days, a small correction, and they go up again, it's good. But when the stocks begin to lose a lot of money, 5%, 10%, 20%, and someone asks you, oh, hold, okay, sell now and look and watch the stock. Okay, don't wait, because each day, for example, you buy a stock at $50, 100 shares, a lot. Okay, you put $5,000 in it. Now the stock is 45 after a few days, especially those last week and the other week when we had the sell-off. Okay, if you sell very quick at 49, 48, 47, you sell, you don't wait, you will lose $100, $200, $300. It's okay. Why it's okay? Because you don't know the future. You are into a stock and it goes down. You begin to lose money. What you should do? You should stop your loss. This is trading. Okay? Now, what will happen after? You watch the stock. If it goes to 40 to 35, and after 1 month or 2 or 3 it goes to your price, which is 48, buy it with 48 or 47. If it's going up again, and maybe this time you are right, and you will make money. Okay, so in trading you should always look at the market, you should look at the industry you are in. Okay, it's so easy. So why you complicate things? Why you think that you begin to listen to analysts, to TV, and some they say to you hold, some they say to sell, and some they speak about the company. Now I will tell you something. In order to make sure that things are going as what I say, there is a sell-off. Okay, I will challenge you. Has something happened to all companies of America here? Do they lose business? No, they don't lose business. They are doing business. You go to Walmart, you go to Costco, you go to Sears, you go to McDonald's, you go to wherever you go, the business is good and they are making money. So why the stock drops? Why the stock is going down? Why they is selling off? Why people they sell off although the businesses are good? They are not in bankruptcy or there is a problem. The investor, what they call the investor. Now people they sell off because they have a profit in those stocks and they go to another stocks that are cheaper and they buy them, okay, in order to make another profit. If someone buys at 10 and now it's 50, he will sell. Okay, he will sell at 50 and looking for other stocks that are 10 and 20, and he do the same. And these are big guys. They are not just, don't think like, don't be naive to think that those people, they buy 100 shares or 1,000 shares. These people, they buy billions of shares of stock. These are mutual funds, big guys in the market. Okay, they move very large quantity of shares. That's why when they sell off, it's an alert to all the people that you should don't wait. Okay, and the people who wait, I am sure that some of you who bought last week or the other week, okay, and you get scared and you say, okay, it's just a small correction, all the stocks will go down a little bit and then it go up. You are wrong. Why you are wrong? Because who tells you that it is a small correction? Who tells you? When the whole market is going down, it means there is a big sell-off. A big sell-off, you can't stop it. Okay? You should short the stock, you should find stocks that are very weak and you short them. That's what you do. Okay? You go with the flow, you go with the big money where it's going. A lot of people are shorting now, and you are going long. So the majority of big hands win always. So you should always be with the big hands, following the direction. The direction now is going down. So either you short, or if you don't know how to short and it's very difficult for you, you just watch the market. Get out and watch the market until things change. Until you see things change. There are some people who can't stop trading. And this is a problem. Okay? A problem because you see that you lost a lot of money and you still put your money inside the market, and the market go down, you lose the money, and then you get out, or you stay, which is worse. When you stay, when you hold, a loser. Okay? And people, what they do, they listen to analysts, they say, oh, this stock, this company is a hold. No, hold it. Don't sell. Because it's just a minor thing, minor correction. And the company is doing good, the earnings are doing good, and it's just a minor thing. And just hold the stock, and then the market will go up again, and you will make money. You cover your loss and everything. But they are not right. What is right? The market is always right, so you should follow the market. Don't follow analysis. Now, how do you follow the market? By the price. Okay, you bought stock at $20. Now it is 15, and you are still holding. When do you sell? When it is like $10, $5 until you lose all your money? Because the people who sell off, they know that some people who hold. Now people who hold, they help them. They help the big guys take their profit very quick. Okay? And they let you with your stock later. When you buy at 20 and now it is $10, and after 1 month, 2 months remains, it will happen nothing to these kind of stocks, because all the people, they sell. No one is buying. You will be only you with the stock, with a few people who are holding, and with the company. Insiders, they hold because it's their company. They can't sell everything because they lose the business. Okay, you will be with those old people who have the company for 20 years, 30 years, 40 years. And they have a big chunk of the company. They are making money, not just from the stock, but from the company itself. Okay, for a dividend, or they have too much money in it. So this is just to highlight what's happening in the market, and when the market goes down, it is, you check the indexes or indices. For example, you go to the Dow. See what's the Dow is doing. The Dow is 30 big companies in America here, and they are going down. Going down, why? Do these companies lose money? No, they don't lose money. You go and check, you go to these companies, they are doing very well. But why they lose, why the stock goes down? Because the stock has nothing to do with the company. But people, they don't understand these simple facts about the price. They don't understand. That's why they are confused. That's why they lose money. And most of the people, it's not only the beginners. Some are investors, but they do the same mistakes as the beginners, thinking that the company, if it is good, you don't worry. The company has 100 years in business, don't worry. Well, anything can happen to the company. So how do we know that something bad happened to the company? It's the price. Because the price, when someone big, insider for example, an executive, he knows something bad about the company, what does he do? Did he go to analysts, did he go to the media or TV and he say that the company is bad, is having problems? No. What he will do, this executive, either a man or a woman, he knows too much, he will sell a big chunk of his shares. Okay? And how do you know that he sells? Without the information that the media give you. Sometimes you say there are some insiders selling their shares and they show it. But they show it later when the price has already dropped from 20 to 10. It's done. So the information they give you has no value. That's why in the market, all the news, all the things. For example, I will give you an example of the information. Now, suppose that I have done a video before about Facebook earnings after the market close. Okay, 4 o'clock. After 4 o'clock, there is the earnings. If it is good earnings, a lot of people buy when they hear the news. Okay. Now beginners, they don't know about how to use the earnings, when to buy, when to sell. I give you a technique before, is that when you have the earnings, you should buy before, either the day before or before the stock market closes. If the earnings will be having a meeting or a broadcast by the company after the market close, what you should do, you buy some shares, and after the market close, you watch the price. Just this. Don't see the news. Good or bad, don't see it, because the price tells you everything. And the price is just quicker. Even though you don't know the news and you can't get to the news at first. But believe me, the price is telling you the truth of what is happening. So you don't worry about Wall Street, guys. Okay, hide your secrets, hide your news, but we know what's going on without the help of the news. Some people, they buy news and they think they'll be smarter than the big guys who have billions of dollars. Are you smarter than them? They can get the news from the person himself before he talks to the media. And they buy before. So what's the catch? The catch is, you see, just the price. If after the market the stock was 50, you will see that the stock going 51, 52. It's just a few minutes. 51, 52, 53, 57, 58, 60, 67. Okay? It goes so quick and you see it. Okay. If you have bought, that means that the news are good for the company. Although you don't know the news. Okay? You see the price. And some people, when I do a video before about Facebook earnings, some people they buy, I ask them what you do. You buy and you wait. After 4 o'clock you watch. You stay watching the tape. Okay? If it's going up and you make a profit, sell. Don't wait until tomorrow, because it's just a day trade. Okay? You just do some minutes, like 20 minutes or 30 minutes, you get some profit and you just sell. Don't worry about anything. Don't wait until tomorrow. Maybe tomorrow there will be happening something bad. Okay? So this is to show you that you can't get the news on time. The news they told you are the news that are old. Okay? You can't take a profit. For example, suppose Facebook after the market get good news for earnings, and let's say the stock is 50. In the morning you find it 60. Now the analysts say to you, oh, the stock is 60 because of the good news of earnings. Now for you in the morning, when they tell you the earnings are good, so what do you do with it? It's over. The stock was 50 and now it goes 60. If you buy it at 60, maybe they short it in the morning and it goes to 55. So you lose money. Okay? So people, I see a lot of brokers having a service to sell news. Some people, they spend money, $10 or $20 or whatever, on buying the news, okay, from the broker. The news is free because they are useless. Okay, they are useless. It means when you get the news, you don't get that much money, because the news comes after the action. The action has always been done. If the stock goes from 50 to 60, and now they say, oh, the stock is 60 because of the news. Now it's over. Okay, you can't get the news on time, because the people who manipulate the market are bigger than you. They can get the news before it is told in the market. Okay. So there are a lot of things that are hidden and you will never know about the market. So what is the main thing that tells you the truth? Okay? What is it? In order not to be confused about the market, is the price. The price is the only thing that tells you the truth. For example, there are, like, let's say, bad news about the market, and the stock was, I did a video before when we had very, very bad news about the earnings about company. It was $63. In the next morning it was $13. So the stock lost about 85% of its price. 85. It means if you bought $10,000, you will have maybe $2,000 in the morning. Okay? You lose everything. Now, if they say to you, oh, it's because of the bad news, it's over. You should watch the news yesterday, not today in the morning, but yesterday. It means the day before, when they get news. You don't let your investment or your trading having the bad news. That's why you are trading. You should be careful about a lot of things in trading. It's not just you buy and you hold. Buy and hold is an old thing. Okay? Buy and hold maybe for small companies that are expanding very well, and you buy some for a long time, and it's better to buy mutual fund than to buy stock by itself. Why? Because mutual fund, the managers, they change the stocks each year. Okay, if you are holding for 30 years or 40 years or 20 years, it's better to buy a mutual fund or an ETF, because there are managers who manage the thing. They take the losers and they put other new ones each year. But a stock, if you are lucky and it was $10 and it go to $100, you are lucky. But suppose that you buy it at 10 and now it is $1, you lose all your investment. That's why it is so risky to risk all your money on one stock for investing for the long run. Okay, so this is just a general video about what's happening in the market. Stop looking at the news and other analysts, what they say, or hold or sell. Sometimes it's a good stock and it's just a small correction, it's going up and they say sell, and you sell, and after a few days it's going up again. Okay, or generally when all the market is going down, what you should do, if you are going long, you should see if your stop loss is hit, get out and watch. If the market is going up again and you see some good stocks, you buy. If not, you wait until you have a new opportunity. Okay, this is called momentum. Momentum, it means you don't trade that much. You just wait for the right moment, for the market when it's going up, for some stocks and the industry is going up, and you see them. You see that those kind of stocks, industries, market is going up. Okay, it's very easy to see. You just see the price. Anything, you see the price for the index and you see it's going up or going down. It's very easy. Put a line in the middle and follow. It's going up, you buy. It's going down, you short. It's so simple. Okay, so hope you understand this lesson of the price and the market and the news, and trade safe. Thank you very much.